Come on, 2, 3.
Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, March 24th, 2022. And our top story today, how are financial advisors helping clients during market turmoil? And joining me now to discuss this and a lot more, Jason Bisnoff covers wealth management for Forbes. Jason, great to see you. Thanks so much for joining us again on the program this morning.
Always a pleasure, Jeff. Thanks for having me.
All right, so let's talk about market volatility, market turbulence. There's a lot going on here, with the geopolitical tensions. We've got the invasion of Russia of Ukraine. We've got inflation, oil embargoes, and a lot of people are relying on their financial advisors to step up and coax them through what is arguably a very difficult time.
Yeah, and it has been not exactly the quiet 2022 we were hoping for after 2 years of a global pandemic. But this is where financial advisors really do shine if they're good at their job, because you're going to get clients panicked and clients who don't necessarily, and I don't begrudge them for that, understand how the actions of Vladimir Putin impact their portfolio. And so I've been making calls. I had several actually off the record calls with advisors at some of the big firms. And actually was surprised to find that a lot of the larger firms actually have done a decent job of reducing their exposure to Russia. And so you're not going to find the skeletons in the closet that I think some people expect when they think of high finance. It has been a huge compliance cost to have clients in the Russias, the Irans, the Saudi Arabias, I don't think there are many clients in North Korea, but those type of countries has been a huge burden. And so in the last few years, the Wells Fargos, the UBSs, the Morgan Stanleys, the Merrill Lynches have actually exited a lot of their personal finance business, a lot of their business in those countries. And so we're actually seeing that a lot of advisors are actually having less burden than you'd think. And so really it's about coaching the clients on this side of the water that a lot is out of their control, and that it's about often staying the course. I mean, I'm not in personal portfolios, and so I don't know what changes have to be made, but a lot of people are being told just to stay the course. I mean, we're 2 years from the trough of the COVID bear market, and I think staying the course there turned out pretty well for the people who did.
Yeah, and by all accounts, I mean, looking at some of the research, and we're really talking about one of your articles from, I guess, at the outset of this invasion. The market really has come back during these geopolitical events. What about inflation, inflationary pressure, gas prices? You go to the store, food prices, supply chain disruption, that has led to increases in prices. This really is a lot of headwinds. And, when you're either a greedy investor or you're a scared investor, I think a lot of investors could be a little bit more scared than greedy right now.
Well, there's this guy, Warren Buffett, who seems to be pretty good at this thing. And he always said, be greedy when others are scared, be scared when others are greedy. The problem with the inflation picture is it's a very complex picture people are trying to simplify. But when you think about it logically, it makes a lot of sense that the supply chain was screwed up when China was aiming for zero COVID. They still are aiming for zero COVID. When you look at everything around your house saying made in China on it, it makes sense. And obviously, Russia invading its sovereign neighbor doesn't help any of this, especially in the energy markets. I think the inflation picture, most of the analysts I've spoken to expect it to be better by the end of this year. Better is in the eye of the beholder, but to be on the right trajectory. That was before the actions of Vladimir Putin, so that remains to be seen. But it also is isolated to several specific markets that if they sort themselves out will really reduce a lot of the pressures. I mean, if you look at energy, you look at cars, if you reduce those, it really would take a huge chunk out of the inflation picture currently. And I think this is another one of those scenarios where, and I don't want to make it sound, advisors often tell me they're part-time psychologist, part-time financial advisor. This is a lot of psychology of just, wait it out. Obviously, that is speaking from privilege. I know there's a lot of people suffering during this, but that is what most financial advisors and their clients who usually come from middle-class backgrounds are telling them to do.
Yeah, I want to touch on that a little bit. The psychological element to this and emotions can run high for a lot of reasons. They can run high when you're doing really well, in which case you can get more greedy, but they can also run real high, as you're saying, when things are not going well. And the role of the advisor has really changed here, Jason. I mean, you mentioned psychology, coaxing people through this. You feel more like a psychotherapist than you do oftentimes a financial advisor. I mean, we all know the right things to do, right? There's dollar cost averaging, putting your money away, looking at the long term. But when things start to happen, you go from those principles to overreact, in some cases overreacting.
Yeah, I mean, if there's ever been a lesson in how hard theoretical is versus practical, it was, March of 2020. That was one of the great buying opportunities we will ever see. It was an incredibly quick rebound. But there were also freezer trucks that I walked past in Queens where they were putting bodies. I mean, who was thinking about buying stocks when that was happening? You were worried what was coming next. And I think so. I think it is also interesting, which goes back to what we were talking before, where you were talking about markets stabilizing, even though Russia is still very much being very aggressive in Ukraine. There's often also the conundrum of people sell on the rumors and buy on the news. You see that also with the Fed's interest rate. With the interest rate, people sold a ton on the rumors because they didn't want the bump in the interest rate. And then since Jay Powell's most recent speech, the markets have been up because now it's never as bad as the rumors are going to pretend. So I think it does require a lot of advisory relationships where you're able to keep a client calm, which is not always easy. And people have reason to not be calm. I mean, war in Europe and a pandemic are not the easiest things to live through.
No, certainly not. Jason, I need to take a very quick break. When we come back, we'll talk more about how financial advisors are helping their clients through volatile times. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Jason Bisnoff of Forbes. JB, thanks so much for staying with us this morning.
Yes, always a pleasure.
It's great to talk to you. All right, let's kind of separate here. The financial advisors have a lot of experience, macroeconomics, a lot of experience looking and doing due diligence on investment products and services. One area that they're probably not as competent in is geopolitics, and there are very few experts who really know what's going on. I would expect that there's a lot of webinars out there, a lot of conference calls that clients can dial into. At the end of the day, we really don't know what's going to happen day to day.
Yeah, there is a recent Vanguard study I cite in one of my stories about geopolitical sell-offs being very short-lived. And specifically, this kind of geopolitical issue is very isolated. It is an energy issue. Russia's main export is energy. I had one source give me a very a quote that it was very juicy, and I always love to get, about how Russia has a 19th century economy to match much of its 19th century attitudes towards the world. It is really what they dig up from the ground is their main export. It's not exactly the most innovative economy currently. But then on the other hand, as I was writing a story about the SWIFT cutoffs, there is still a possibility if natural gas is fully cut off from Russia, that Europe could be rationing energy. So you can make this bullish case of, oh, it's just isolated to one market, but you could also see some worst case scenarios that are a little bit scarier. I do think that the fact that the way that the Russian invasion has gone not according to plan has caused some sense of optimism in the markets. But also some of that optimism, sadly enough, because the market is agnostic to morals, it is about dollars and cents. Some of that positivity is also that it's now become a little bit more ignorable for a lot of traders.
Yeah. Jason, kind of shifting gears a little bit, you and I have talked about how do you find a financial advisor? Is this the time, if you're not currently working with an FA or you're not happy with your financial advisor, is this the time to go out and look for one? And we always talk about the Form ADV and some of the other filings that these organizations have to do. Are there any additional things that you should be thinking about? I mean, do you ask them about how would you handle this geopolitical tension? What would you do a little bit differently in my portfolio?
Well, great opportunity for a shameless plug. Forbes does have a list of top advisors that is pretty robust and covers states and areas. And so I think that's obviously a good resource. I think luckily for people searching for advisors, one of the great developments in the advisory industry over the last 30, 40 years from the days of Wall Street and Boiler Room, talking about the films, is that now advisors, many of them are fee-based, which means that their fee is a percentage of what you are trading. So their incentive is to make your account have more money in it. It used to be you paid for trades, and paying for trades is very antiquated at this point. So I think as much as you want to do your due diligence, there's websites like FINRA's Broker Check, which is done by the government, and you can see any demerits on their record. A lot of advisors who are fee only really don't have much incentive beyond making you more money. I don't want to co-sign there. Every single day I get a news alert about some advisor who's been caught in some scheme. That is like any other industry. There are bad actors. But the development of fee only makes it a lot easier to avoid stuff like churning, where advisors are just trading extra, selling and buying to generate fees, that it really doesn't benefit them anymore to do that.
Yeah, and by the way, you get a nice capital gains tax bill this time of year as well. Last question, Jason. ESG sustainability has been top of mind for many retail and institutional investors. I know you got some things cooking in the hopper. What are we looking forward to towards next week in your writing?
Yeah, I kept you waiting because I was on the phone with the SEC speaking to them about their new rulemaking. They've introduced a new rule that would require companies to disclose their climate impact and how climate change could negatively impact their business. It's something that I expect there'll be a lot of conversation about going forward. Companies will inevitably not like the idea of having a bigger compliance budget and having more to disclose. But nonetheless, the commission sees it as a material need. If your business if all your factories are going to be underwater in the next 20 years, that an investor should know that before they invest in you. And so I think that I do have a story I'm working on, hopefully getting out later today, that you could check out about what this means for investors.
Well, we're looking forward to it. And I agree. The more disclosure, the better, certainly for the shareholder And this is really it's not new, but it's really a trending asset class, and people need as much data as they can get in order to make the best investment decision. Jason Bisnoff, always a pleasure chatting with you. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Thanks, Jeff.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, check out today's edition of our daily newsletter, The Morning Pulse. Want to see our latest content or search our archives? Well, check out our website and our streaming partners like Amazon, Roku, Samsung, over 100 more. We're back again tomorrow for another edition of BRN AM. Do tune in. And until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.